One of the ways that investors can have exposure to different geographic areas and also different sectors is to invest in exchange traded funds. Today I'm going to talk about QQQ as one of an example of the ETFs that has beaten the S&P 500 over the past 10 years. 9 out of 10 times QQQ, as it is known by its ticker name, it has beaten the S&P 500. So I will share with you some insights in terms of the performance and other insights like the cost of investing in this ETF. But I do want to disclaimer though that this is educational content. It should not be taken as investment advice. And now for those who are new, my name is Isaac Jonas. I studied Streetwise Economics in December 2023 with the goal to just share content like I'm doing for educational purposes, and I like investing in the Canadian and US stock exchanges. So getting on in terms of QQQ, this was founded in 1999, and the company that manages this exchange traded fund is called Invesco. It is listed in the Nasdaq, which mostly trades or where most technology companies are listed. It is a very interesting and highly liquid fund because about 44 million shares actually get traded if you take an average of the 30-day period. And like I said, 9 out of 10 times over the past 10 years between 2013 and 2023, it has beaten the S&P 500 in terms of the annual performance. So it is a very interesting ETF. Now, in terms of composition, it is mostly weighted towards the technology sector, as I will show you. But you can see that Apple is on top in terms of the weight. It is about 11%, followed by Microsoft with 9%. I will show you more about that. But another interesting thing here is that the administration fee is about 0.2%. So when you are investing over the long term, administration fees can actually reduce, ultimately reduce your performance or annual return, because it's money that is being taken away from you. But in this case, it's for the fund manager for administrative purpose so that they can do the work to manage that fund. Now, in terms of the fund composition, I like that it has somewhat little exposure to other countries like China and Brazil, Netherlands, you can see, but it's very minimal. 98% of the fund is mostly invested in the US, and 57% of which is in the technology sector and also the consumer discretionary, which is good because now if other sectors are not doing well, you can see that other sectors can sort of lift up those that are not doing well, because sometimes the money rotates, from other sectors. In 2023, the technology sector started off on a low note, but you find that at the end of the day, the year they were performing really, really well. Companies like Microsoft, Meta, and even the Gang of Seven. If you look at even Netflix, Tesla, they did fantastically well in 2023. So what that means is it can lift up the average performance. But also another important thing is that sometimes, even though companies are domiciled in the US, Apple has factories in China and Europe, and also the sales, they are all over the world, including Africa. So even if in the US or other countries may not be doing well in terms of the performance and the revenue side of things, that can sort of help. Unlike if a company is just based in one company and then they don't uh, uh, sell their products outside of that geographic region. And now, in terms of performance between the past 10 years, 2013 and 2023, you see that the S&P is the one in dark blue line, which is down. It is down, and the Nasdaq is, in this case, QQQ. This one is the one in blue. It is on top of the S&P 500, implying that it was performing much better over the past 10 years from 2013 to 2023. So if someone had invested their money in this fund about 10,000 10 years ago, it would be almost 50,000. So which is good. Now also, if you look at the revenue, it is more revenue in terms of the companies that are part of the QQQ ETF. They have higher revenue, and if you look at it in terms of numbers, 10%, and S&P it's about almost 50%. So the companies that are part of this, they've very high revenue potential, and you also see the dividends here. If an investor is looking for high dividends, you can see that relative to the S&P 500 and the Russell 1000, these are somewhat medium sized companies, and they are in a class of those 1000 that are in that market capitalization category. So it is actually much better in terms of dividends. So if you want more dividends, it's something that is to be considered. But when investing, there are a lot of things that have to be considered. For example, time horizon, volatility, because it is very volatile. Sometimes it goes up and down, as I will explain in part 2. But for now, this is part 1. I just wanted to give you a brief background about QQQ as a fund, or rather an ETF. So thank you so much, and also please consider subscribing on my channel if you want to listen into content like this in the future. Thank you.